Chapter 9, Payroll. In this video, we'll be discussing Learning Unit 9.1, calculating various types of employees' gross pay. We're going to start out by discussing pay cycles. Companies usually pay employees on a weekly, bi-weekly, semi-monthly, or monthly manner. How often employers pay employees can affect how employees manage their money. Some people prefer to be paid a weekly paycheck. Others who have monthly bills find that a twice a month or monthly paycheck more convenient. So in taking this example, we're going to assume that a person earns $50,000 a year. This table shows you what you would earn each pay period. So if you were paid on a weekly basis, once a week, there are 52 weeks in a year, your gross earnings would be $961.54. Your $50,000 salary divided by 52. If you were paid on a bi-weekly method, you would get paid 26 times a year. You would get paid every 2 weeks. Bi-weekly means every 2 weeks. So your earnings for the period would be $1,923.08. Semi-monthly is different than bi-weekly. Semi-monthly means you get paid twice a month or 24 times a year. So the difference in these two, for example, if you're a semi-monthly employee, you might get paid on the 1st and the 15th of the month. If you're a bi-weekly employee, you would get paid, say, every other Friday. There would be 2 months of the year in which you would get 3 paychecks instead of the regular 2. So because you know how some months have 31 days and things like that. So bi-weekly gets paid 2 times more a year than semi-monthly. You still get the same total earnings. It's just whether you're paid every 2 weeks or twice a month. And then lastly, monthly. You get paid once a month. Usually it's the first of the month or the last day of the month. So you get paid 12 times a year. So your earnings are higher for the period. So for example, at Wake Tech pays me monthly on the last working day of the month. So if this was March, then they would pay me on March 31st, and I would get paid one time or 12 times a year, once a month, for $4,166.67. My husband, on the other hand, he is paid weekly. He gets paid every Thursday. So he gets paid 52 times a year. So his check is smaller each pay period, but he has more pay periods than I do. The Fair Labor Standards Act sets a minimum wage standards and overtime regulations for employees of companies that are covered by the law. This law provides that employees working for an hourly rate must receive time and a half for hours worked in excess of their regular 40-hour week. However, many managerial people are exempt from this time and a half pay. They're considered like salaried employees. So example, my previous job as a CPA, I was a salaried employee. So during tax season, I might work 60 hours a week, but I was paid the same salary. I didn't have overtime. On the flip side of that, in the summer months that wasn't tax season, I only had to work 36 hours a week and still earn the same salary. I was an exempt employee from this overtime calculation. So to calculate your gross pay, you take the hours the employee worked within the week and multiply it times the rate per hour. If it's over 40 hours, then you have to pay time and a half. So you have to calculate the hourly overtime pay rate, which would be your regular pay rate times 1.5. Then you would calculate first your gross pay for the 40 hours, and then any earnings at the time and a half rate. And we'll take a look at this in a moment. But first, let's look at just a straight normal week. We're going to talk with Logan Company, and he's calculating the pay for Bernie Roy. On Monday, he worked 9 hours, Tuesday 6, Wednesday 9, so forth. And his pay rate is $8.95 per hour. So how many hours did he work this week? He worked a total of 37 hours. He's under the 40-hour amount, so he does not have any overtime. So take your 37 hours and multiply it times your hourly rate of $8.95. So his gross pay is $331.15. Now let's look at an example of Ramon, who has worked overtime. He worked 13 hours on Monday, 8.5 on Tuesday, 10 on Wednesday, and so forth. So for the entire week, he worked a total of 61.5 hours. That 61.5 hours is over his 40-hour week, so he has time and a half pay we need to calculate. His pay rate is $9 per hour. So first we need to determine how many overtime hours he has. His total hours of 61.5 less his 40 hours of regular pay, he has 21.5 overtime hours. His hourly overtime pay rate is his regular hourly pay rate times 1.5. So $9 times 1.5, his overtime pay rate is $13.50. Please note, $13.50 came out at an even amount. If an overtime rate comes out to where it would be more than 2 decimal places, do not round the overtime rate. Round only your final answer. This gives greater accuracy. For example, if instead of a $9 an hour rate, he was paid $8.75 an hour, $8.75 times 1.5 equals 13.125. Do not round the 13.125. Leave it as 13.125 for an overtime rate. Next, calculate his gross pay. Calculate his earnings for 40 hours plus his earnings at the time and a half rate. So, for 40 hours, he earned $9 an hour, or $360. Then you add the overtime. 21.5 hours times your overtime rate of $13.50. For his overtime, he earned $290.25. Therefore, his total gross pay for this week is $650.25. Here's another example. Assume overtime for each employee is a time and a half rate after 40 hours. Blue worked the following hours: 12, 9, 9, 9, 9, 3. So how many regular hours did he work, and how many overtime hours did he work? Well, first we need to calculate the total number of hours worked. The total number of hours that Blue worked was 51. So if Blue worked 51, and after 40 hours it's considered overtime, then there was 11 hours of overtime. If the regular rate is $8, our overtime rate is 1.5 times that, or $12. Lastly, what would be Blue's gross earnings? Take the 40-hour regular pay times $8 to get $320. Then take the 11 hours of overtime and multiply it times $12 overtime pay for $68.40. Therefore, your total gross pay is $452, and that should say 40 cents. I apologize, there was a math error. 11 hours of overtime times $12 rate, his overtime pay would actually be $132. $132 overtime rate plus the $320 gross base pay gives you $452 total pay. Next, we talk about straight piece pay. Some companies, especially manufacturers, pay workers according to how much they produce. For example, Logan Company pays Ryan for the number of dolls he produces in a week. During last week of April, he produced $900. He is paid 96 cents per doll less any defective units. Calculate his gross pay. By using the straight piece pay rate, it encourages and gives Ryan an incentive to make more money by producing more dolls. To calculate his pay, you simply take the number of units he produced times his rate per unit. In this example, he produces 900 dolls and he's paid 96 cents per doll. So he is paid $864. Another example, Lang. Lang is paid on a straight piece pay rate. She produces 480 units and is paid $3.50 per unit. What would be her gross earnings? The number of dolls that she produced times her rate per unit, she would have earned $1,680. Sometimes employees can earn more than a straight piece rate for every doll they produce. In this example, Logan has set up a differential pay schedule. The company determines the rate these employees make by the amount of units the employee produces at different levels of production. In this example, Logan is paying Abby on the following basis. For the first 50 dolls produced, she makes 50 cents a unit. For the next 100 dolls, she makes 62 cents a unit. For the next 50, she makes 75 cents. And for over 200 units, she makes $1.25. This is not saying that if she produces 250 dolls, all 250 are priced at $1.25 each. You have to calculate the first 50 at 50 cents, the next 100 at 62, the next 50 at 75, then any additional dolls at $1.25. So for example, she produced 300 dolls. What is her gross pay? The first 50, she's paid 50 cents. So for the first 50 dolls, she makes $25. The next 100 dolls, she's paid 62 cents a piece. So she makes $62. The next 50, she makes 75 cents. So $37.50. Then lastly, the last 100 dolls that she produces fall into this category at $1.25. So she gets $125 for those 100 dolls. So her gross pay for the 300 dolls is the amount from each category for a total of $249.50. Do not take just the 300 dolls and multiply it times $1.25. That would be incorrect. Another example. Calculate the gross earnings for an apple picker based on the following differential pay scales. For apples 1 through 1,000 picked, they earn 3 cents apiece. For apples 1,001 through 1,600, 5 cents apiece. Any apple over 1,600 is paid 7 cents apiece. Ryan picked 1,600 apples. What is his gross earnings? The first 1,000 are at 3 cents apiece. The next 600 are at 5 cents apiece. He didn't get to this category, so he has nothing at 7 cents apiece. So he's paid $60 for his 1,600 apples picked. Companies frequently use a straight commission to determine the pay of a salesperson. This commission is usually a certain percentage of the amount that the salesperson sells. Sometimes companies allow their salespersons to draw against their commissions at the beginning of each month. A draw is an advance on the salesperson's commission. Logan subtracts this advance later from the employee's commission earned based on sales. If the commission does not equal the draw, the salesperson would then owe the company the difference between the draw and the commission. For example, Logan pays Jackie a straight commission of 15% on her net sales. Net sales being total sales less returns. In May, she had net sales of $56,000, and he also gave her a $600 draw in May. What would be her gross pay? First, we need to calculate her commission. She's paid 15% commission on $56,000 of net sales. So her commission is $8,400, but that is not her gross pay that he would pay her. She's already taken a draw against her commission of $600. So her gross pay is $7,800. A company sometimes sets a variable commission scale. and uses different commission rates for different levels of sales. This is similar to that differential pay schedule that we saw. The more a person sells, the higher the commission rate is. So for example, on sales of up to $35,000, the person would earn 4%. Sales in excess of $35,000, but up to 45 would earn 6, and anything over 45 equals 8% rate. Last month, Jane's net sales were $160,000. What is her gross pay based on the schedule? Again, do not simply take net sales of 160 and multiply it times 8%. She does not earn 8% on the entire 160,000. She earns 4% on the first 35,000, 6% on the next 10,000, the difference between the 35 and the 45. Then what's left is the 115,000 that she earns 8% at. So for the first category, she earns $1,400. For the second, she earns $600. And then for the last one, she earns $92. So her total gross pay is $11,200. Another example. Ron Company has the following commission schedule. Sales of up to $80,000 are paid at a commission rate of 2%. Sales over $80,000 and up to $100,000 are paid at 3.5%, and sales over $100,000 are paid at 4%. Calculate the gross earnings of his companies if Ron sold $155,000. So, first category, he sold $80,000, so he earns 2% on that $80,000 or $1,600. The next category has $20,000 in it, $80,000 to $100,000. That's a $20,000 range. So 20,000 times 3.5% is $700. Lastly, anything over 100,000, which would be the 55, is at 4% or $2,200. So his total earnings would be $4,500. Sometimes companies pay employees a monthly salary plus commission for sales over a certain amount. In this example, Logan Company pays Joe a $3,000 monthly salary plus 4% commission for sales over $20,000. Last month, Joe's net sales were $50,000. Calculate Joe's monthly gross pay. So we know he has a set monthly salary of $3,000, and he earns 4% on sales over $20,000. So he had sales of $30,000 that were over the $20,000. $50,000 less 20 is 30%. He earns 4% on that $30,000. His base salary of $3,000 plus his commission of $1,200. He has a gross pay of $4,200.